Thor Financial is one of the most recent passive income node projects, and probably one of the hottest right now. Like all of these projects, they promise insane returns without much to back it up. Their objective statement says that our objective is to help as many to generate passive income continuously with minimal effort. This is the reward people truly deserve, and we are bringing this to you. So that's right, you deserve passive income, but not just passive income, you deserve passive income continuously with minimal effort. So obviously this seems like a pretty sweet deal. And as you'd expect, the usual cadre of passive income YouTubers also agree. There are countless videos on how much money you can make by just buying Thor nodes and then compounding your investment. Of course, the data doesn't actually back this up, and that, along with many other signs, point to this being a cut and dry Ponzi scheme. In this video, I'm going to show you some of those signs of being a Ponzi, go through Thor's actual investments and value proposition, and then make predictions for when it will actually crash based on actual Thor data. So what is Thor? Thor is one of many of these different node projects that have popped up in the last few months. They say that they are node as a service, stealing that line directly from Strongblock, which I just made a video about. The funny thing is that Strongblock was actually trying to convince investors that they were running Ethereum nodes, whereas when Thor started, they didn't even try. They just took the idea of a node and ran with it. They also say that this is passive income without the risk of rug pulls and scams. They claim that they're a multi-chain yield farming protocol, which is actually an interesting concept. But pretty much everything else about this project is super sketchy. The idea of investing in nodes, which will somehow invest in DeFi protocols, is directly copied from Ring Financial. But as you can see, that project didn't work out too well. So they say that they're a multi-chain yield farming protocol. Let's see how it actually works. The general idea is that you use Thor tokens to buy Thor nodes. Over time, these Thor nodes will pay you back in Thor tokens, until eventually you'll make back more Thor tokens than you put in. So where does the DeFi stuff come in? Lucky for us, they have this big and kind of boring looking chart on how it actually works. If you actually read through this, you'll see that almost 95% of this chart is basically telling people how, like the physical steps that they would take to invest in a Thor node. The only part that's actually interesting is this idea that they're getting their money to invest in DeFi protocols from taxes that are assessed on the Thor rewards. So already, there are an insane number of problems with this proposal. At this point, I've uncovered tens of Ponzi schemes in crypto, and I've realized that there are some very common patterns that all of these fall into. So let's cover these real quick to see if Thor Financial falls into this bucket, and so that you could spot them in the future. So the very first thing that almost all of these have in common is some kind of legitimate problem or solution that they're offering. In the case of Olympus DAO, they said that they would have a reserve currency. In the case of Strong Nodes, they said that they would help secure the blockchain by running nodes. In the case of Thor, they're saying that they'll invest your financial returns for you. So this is where the similarities with legitimate projects usually ends. Most legitimate projects are fine with saying they have some audacious goal without the rest of these three red flags. So the first thing that should make you start scratching your head is the promise of insane returns. If you buy the most expensive Thor node, they say that you'll be able to earn your Thor tokens back in 77 days. If this were actually sustainable, you'd be a billionaire in a few years with just a small investment. The best money managers of all time don't even get close to this amount of return. So how does it actually work? Almost every single one of these Ponzi schemes asks you to buy these tokens and lock them somehow up front. In Thor's case, the locking the tokens is actually buying a node. So you're taking a big chunk of Thor tokens and putting them into a set asset, which is the node. Then the insane rewards that they're promising are paid in the form of the same token that you locked. As this kind of project gains popularity, a lot of people are locking up their tokens, which creates a short amount of supply and more demand for the token, causing the price to go up. This is why every single one of these projects has price spikes in their token towards the beginning. Because the rewards are paid in the same exact token that the creators of the project can just make out of thin air, they seem much better than they are, when in reality, the inflation of the token will cause the value to go down. So by the time you actually collect your rewards, unless an exponentially greater amount of people have bought in, they'll be worth way less than you put in originally. Thor Financial checks all of these boxes. But as always, let's give them the benefit of the doubt and look at what they're actually proposing. Thor has made a number of investments with the money that they've collected from their taxes on the Thor node rewards. As you can see, their first investments were in Time, Strong, Anchor, and Hector. While I don't know much about Hector, I do know that the rewards from Time and Strong are both unsustainable. Anchor is slightly less risky, but still carries a lot of risk, as I outlined in my Luna video. And as you can see, their first investment didn't do that well, with Time crashing over 80% since they bought in early January. So some of their other investments include Matic, which I like, FTM, Luna, and Ohm, which are okay minus the Ohm, 2 Phantom Validator nodes, which will earn 9% returns by staking, 300,000 into Tomb, which I need to do more research on, and then 250,000 into DAG. So as you can see, they've made maybe a few $1 million investments so far, but as a whole, those investments haven't done so well. It's also worth noting that their community manager is literally Loki, who's a Norse god of mischief and chaos, which is kind of ironic. In Thor's own website, they say that the combination of their treasury wallet and investment wallet adds up to just over $5 million. Well, I'm not necessarily a fan of their investments, and it appears to me that some of them are into other Ponzi schemes, some of them actually do seem legitimate. The real question is whether or not these investments will be able to sustain the rewards given out by the protocol, and luckily we have the data to show that. Stepping back, Thor has gained an insane amount of popularity, which is the first sign of trouble for every single Ponzi scheme. As you get an exponentially greater amount of users, you need exponentially more users to keep the Ponzi going. This is why the fastest growing Ponzi schemes are the quickest to crash. And the founders of Thor recognize this. They recently made an announcement changing the reward structure to lower the amount of rewards, add increased taxes, and add maintenance fees. Obviously, they realized that they were growing too fast and they wanted to sustain this Ponzi as long as possible. So this is a summary of the changes that they made, but the most significant thing was they lowered the rewards for each Thor node. But this will still not be sustainable, as I'll show you next. The other thing they did was add a maintenance fee to each of the Thor nodes. This maintenance fee is not pegged to the value of Thor tokens, but it's pegged to the value of US dollars. This doesn't make any sense because smart contracts on the blockchain, like these Thor nodes are, do not actually require any maintenance fees. All of the actual maintenance fees are the gas paid when people are making transactions or deploying the node. So to me, this just seems like another way where the founders can skim real value out of their users that have already bought Thor tokens. So lucky for us, Thor actually has the number for each of these types of nodes published to their website. They have over 110,000 nodes total right now, with the majority being the cheapest one and the most expensive one, which is most efficient in terms of token rewards. So using the new and lower rewards metrics for these nodes, I calculated the total number of Thor being printed per day by nodes. That number is over 27,000 Thor per day. At the current value of $95, that's over $2.5 million a day. Although by the time you're seeing this, it's likely the value of Thor will be much lower. So what this really means is that the investments have to be making over $2.5 million worth of value a day in order for this project to be sustainable. According to their own numbers, they only have around $5 million in total investments. And many of those investments are not even doing so well. As you can see, this token inflation has already caused the price of the Thor token to start declining. With the cut in the rewards per node and the declining price, I think that this has started a negative feedback loop where less and less investors are interested in purchasing their first node. As these new investors dry up, it'll become even more apparent that Thor Financial's yield farming will not be enough to sustain the protocol. This negative feedback loop is already in full swing. Obviously, I think that this is a Ponzi scheme and that you should stay away. If you need to invest in a Ponzi scheme, you're better off finding one that is closer to the beginning of their cycle, although I wouldn't recommend it. It's possible I got some stuff wrong, so feel free to let me know in the comments. But it's also worth noting that like with all Ponzi schemes, people that are already invested require new users to come in order for them to not lose all their money. For that reason, I would be extremely skeptical when taking advice from people that already own nodes. While it's possible that they believe in the project, it's also possible that they're just trying to keep the illusion alive in order to make their money back. So if you agree with my slightly contrarian take, leave a like or a positive comment because I know the people who own Thor nodes are coming for me on this one. Anyways, thanks, and I'll see you in the next video.